Saturday, April 1st, 2023, Maneco 64, home of alternative economics and contrarian views. We're going to do something different today, and hopefully it will become a tradition. We're going to look at the national currencies, or the fiat currencies, and the scorecard for the major fiat currencies of the world for the first quarter of 2023, and we'll keep doing it every quarter. And you might ask, what are they going to be measured against? Against the dollar, the fiat dollar? No. They're going to be measured against real money, i.e. gold. As JP Morgan once said, gold is money, everything else is credit. For those of you who are not really familiar with the concept, I recommend you watch my videos from the fiat currencies. They're all syncing playlist, and also watch the videos from my Bretton Woods playlist, which explains how the current monetary system has evolved since the end of World War II. So we're going to start with the worst performing currencies. And of course, I don't have all the currencies in the world, but I picked currencies that I think are relatively important and from major countries. And if I haven't done the currency of your country, is nothing personal. So here we go. The Lebanese pound has dropped 91% versus gold since the beginning of 2023. And then we jump to the Argentine peso. That's dropped 22% versus gold. We've got the Russian ruble dropping 14%. The Norwegian krona, which is quite surprising, I thought, dropping 13%. A supposedly developed Nordic, Scandinavian safe haven, right? We've got the South African rand. That dropped 12% in the first quarter of this year. And then we've got the South Korean won dropping 10%. So let's keep moving. We got the Turkish lira actually dropping 10% as well. The Japanese yen dropping 9%. So much for deflation in Japan. And why do I say that? Well, because when the currency is dropping so much versus gold, it's currency debasement. It's actually inflation. You're inflating the currency. So we've got the Israeli shekel down 9% as well. We've got the Aussie dollar down 9%. We've got the Kiwi dollar down 9%, as you can see. And the Canadian dollar actually improving a little bit, down 8%. So we keep moving forward. We got the Malaysian ringgit down 8% as well. We've got the US dollar down 8% as well. We've got the Chinese yuan down 8%. The Saudi rial, that's down 8% as well. In the first quarter, we got the Indian rupee down 7%. Swedish krona down 7% as well. We've got the Singapore dollar down 7%. The Swiss franc is down 7% as well. And here we've got the British pound, the currency of the country where I live. That's down 6%. So yesterday I saw a headline in the Daily Telegraph saying that the pound has been the best performing currency of 2023. But if you click into the story, they say that it's of the major developed countries. So let's continue. The euro dropped 6% as well. So the euro is actually outperforming the dollar and all the other ones prior to it, with the exception of the pound. They've done the same. We've got the Indonesian rupee. That's down 5%. And then we've got the Brazilian real down only 4% versus gold. And now we go to the winner. And I think a lot of you are going to be surprised. Here we go. The Mexican peso is the winner. It's down only 1% versus gold in 2023. So much for the banana republic. It looks like everything is getting inverted. But let's continue here. And I was looking at the Mexican peso a couple of weeks ago, and the Brazilian real, why they had done so well actually in the last 2 years relative to the dollar and gold. And if you look at the Mexico interest rates, central bank interest rates, you can see that the Mexicans started raising rates in the middle of 2021 when CPI started picking up. They call it inflation here. And you can see that we are above 10%. So they got ahead of inflation, the central bank in Mexico, and they actually raised rates above the rate of inflation, which is quite impressive. And you look at the Brazilian interest rates as well. They started going up as well right in the beginning of 2021 when inflation was picking up. And they're just below 14% now at 13.75%. And their CPI is actually dropped below 6%. So they have positive real rates. And that's probably why their currencies have performed well. But you look at the UK here and the US, look at UK interest rates, they only started rising like almost a year after Mexico and Brazil in 2022. And they were rising from 0%. If you look back at the Mexico interest rates, they're already positive real rates even before inflation started picking up in 2021. So you can see that we're still about almost 10% negative real rates as per the retail price index. Why do I use the retail price index? Well, because that's a much better indication of the average household's increase in cost of living. So let's look at the United States. You can see that CPI, or inflation as some people call it, like Trading Economic does, started picking up in 2021 as well. But look at the Fed. The Fed actually only started raising rates after the start of 2022. Yes, they did accelerate their rate hikes, but we're still below the rate of inflation, as you can see here. And some people would argue that this 6% rate is really not the real rate. It's probably more like 10 or even like 15%. As per Shadow Stats and John Williams data. So what I did here is look at the Mexican peso, or gold versus Mexican peso, for the last 2 years. And as you can see, gold is up 3% in the last 2 years versus the Mexican peso. Versus the Brazilian real, gold is up 4%. And then if you look at the dollar, or gold versus the dollar, gold is up 15% in the last 2 years. And versus the British pound, gold is up almost 30%. So it's just like the inversion. The US and the UK have become the banana republics in terms of currency soundness. Yes, I know 2 years is a small window of period. Yes, in the last 20, 30, 50 years, the Mexican peso and the Brazilian currency haven't done as well as the dollar, maybe not as well as the pound either. But it's weird, isn't it? And I think interest rates are the main reason for this. The fact that Mexico and Brazil, they're running positive real rates. And just to let you know, this data here is up until the 27th of March. It's not at the end of the quarter, but it hasn't changed much in the last 2 years. So what this shows as well is that gold is really the at the base of everything, even though the Mexican peso has outperformed the Brazilian real and has especially outperformed the dollar and has massively outperformed the British pound. Gold is still outperformed the Mexican peso. The other thing that this tells me, yes, the BRICS are working to leave the the current dollar system. They want to have their own currency system, but it's not going to be smooth sailing for them either, because you saw the scorecard earlier. The Russian ruble hasn't done too well. The Chinese yuan hasn't done as well. I mean, it's on par with what the US has done in the first quarter. So at the end of the day, gold is the best thing to have, really, if you want to save and not lose the purchasing power of your savings. So I wanted to show you this as well here. Dollar and major European currencies since August 15, 1971. For those of you who don't know, August 15, 1971 was when the United States really, or under President Nixon, closed the gold window, which meant that the dollar was not convertible at a fixed rate of $35 per ounce, per troy ounce of gold anymore. And he closed the gold window temporarily. What this meant is that the US could just issue as many dollars as it wanted without having the gold reserves to back it up. And that's why we have seen since 1971, as you can see here on the chart at the bottom left, that the dollar has lost 98% of its value versus the gram of gold. You can see that the euro as well, which is a combination of the major European currencies, has lost 98% of its value as well versus gold. And the British pound has lost 99%. Doesn't sound like much, but it makes a big difference, because as we see here at the top, we've got the dollar versus the euro since August 15, 1971. Dollar's lost 11%, so much for the king dollar. And of course, the euro was only created in the late 90s, but you can extrapolate the value of the euro through the legacy European currencies. And the British pound, has it done well versus the dollar? No. The British pound has lost almost 50% of its value versus the dollar since 1971. So the euro has done even better against the British pound, is what I'm trying to tell you here. So the other chart here at the top left is a chart of the dollar from 1953, which is the furthest that FX top goes, to August 15, 1971. And you can see that the dollar up until the early 70s, and especially 1971, August 15th, was fixed. The dollar was a weight of gold, was as good as gold, $35 per troy ounce. They kind of lost control here in 1968. As you can see, there's a big drop, and then the dollar rebounded. And a lot of people thought, oh, that's fine now. The dollar is going to be fine. But then all of a sudden, Nixon closed the gold window. And yes, the dollar's been evaporating, sinking since then. But it's not just the dollar, as you've seen. It's all fiat currencies. So with that, I'm going to wish you all a great rest of the weekend. Take care. Bye.